trap number one, buying in your own backyard. And for this, I would love for our property advisor, Stefan, to tell us a little bit about why buying in your own backyard may not be the best idea. Steph, over to you.
Thanks, Michael. So it's all come down to location, and a few people mentioned that in the slide previously. So what is buying property in your own backyard is not probably the right investment, obviously, strategy. I mean, unless you are buying a property where we are currently investing, that's a different story. But a lot of people are buying a property in their own backyard simply because they just know the area, right? So they live there, they work there. So it's more like a comfort approach. Okay, so for us at PropHero, it's very different. It all comes down to market knowledge and having the right data available in order to purchase the right property in the right location. Okay, so this is what we do best. Okay, so we do this for all our clients. We have all the key metrics and all critical information related to buying an investment property. And this is all available in the app for our clients, so they have a full understanding of what they are buying. Okay, so the slides here is really to show you, okay, if I've invested $500,000 5 years ago in the areas that we're currently, targeting versus any other areas, then you will be in a better financial position. Okay, so now the good news is it's not too late, and obviously we're currently helping hundreds of clients, finding, their perfect property. Okay, so that's the bottom line here.
Yeah, 100%, Stefan, and we see it pretty often, right? And we even see like people making the trade-off, so they will buy a unit in Sydney or Melbourne instead of a house in a high growth, high yield area, right? And so for many, many reasons, it's just like such a bad choice, right? It's just like, yeah, not efficient at all. And if you remove emotions, it's very unlikely that where you live is the best area where to invest. It's just, it's just like simple, right? So definitely, thanks, Steph, for this. All right, trap number two, lack of due diligence. And Stefan, this is your bread and butter every day. So please tell us a little bit about this. And I know that you spend your days explaining this to our clients.
Yeah, no, that's cool. Look, this one is, I just can't express enough. This is pretty cool. Okay, so regardless if it's an investment property or property you're planning to live in, you need to buy the right property in the right location. Okay, this is massive. Okay. So at PropHero, when we do all the due diligence, okay, for our clients, so looking at flood risk area, bushfire risk area, we also look at noise risk area, and then also finally zoning risk. Okay, so again, we have all that information for our clients in the app, and that's for every properties. Okay, so if there's a property that we are concerned about, our clients will never see that property. Let's put it this way. Okay, so it's important to note here that none of the property that we bought for our clients, okay, have been affected either by floods or bushfire ever.
Yes, indeed, and we are like a very strict on that. And can I add that it's not only about like checking this, but also like taking like a massive buffer in terms of location, right? Honestly, like I'm so sad when I see people, they've put all their lives savings into a property next to the river in Brisbane, right? Or just right next to like a high bushfire risk, or right next to where the new highway is going to be built, or if they are going to be surrounded very soon with buildings, if they bought like in a nice neighborhood with just like beautiful houses. Like this has one of the biggest impact that you can have on your investment. And just to give you a few examples, right? So I see, I actually like, we see, of course, what traditional buyers agents do, right? Because we see them, sometimes we bid on the same properties, but most often they operate in areas where it's like very easy to buy because it's just like less attractive areas, and they don't check those, right? So again, not pointing finger to anyone, but for you guys, please like be careful of that. I know that some of our like traditional buyers agents buy in Bundaberg, like in like a massive flood risk areas. Some buy, like in areas with like bushfires. I've just put Rockhampton here, but of course there are like many others. And when it comes to Brisbane is actually like overall a great area where to invest right now, especially because you're buying like 8 or 9% below peak. However, just be careful right there, like so many infrastructure work in the area you really don't want to buy next to the future Bruce Highway line, right? It's just like you really don't want to be there. So it's just a few examples. There are like many, many more. We can think about the percentage of renters versus owner occupiers. You can think about social housing. You can think about criminality. I mean, there are like many, many other aspects to due diligence that we check. We've put like the biggest one in terms of like what it could do to your investment. But yeah, like this is like by far like the right due diligence, like it goes before everything else, right? Because even if you buy in a great area, but if your house is going to be flooded, I mean, you are going to lose everything. All right, trap number 3, something that we are like really keen about, that we've been like very vocal about even like before launching PropHero, to be honest, is not taking climate change into account. And here, so I think that numbers are better than anything. So the Climate Council of Australia has shared maps and data around climate change risk over time. And if we take, for example, Mackay, right now, so by 2030, only 1% of properties will be affected by climate change, right? I mean, like significantly affected by climate change. Think about floods or bushfire or coastal inundations, etc. By 2050, it will be 5%, low, but you really don't want to be the 5%. And by 2100, 29% of properties will be affected. It's not the most extreme case, but I just didn't want to, like, of course, point finger to anyone. But yeah, like things that if you're buying today close to a flood risk area, it's pretty likely that in 4, 5, 6, 7 years, so before the time that you sell it, you will be affected by floods or bushfires or high tides or something similar, right? So don't only look at the past, look at the future projections. And we are very lucky in Australia to have the Climate Council. Check those projections, because it will give you a good idea of what's the risk level in the coming years. All right, trap number 4, buying in regional areas with risky macroeconomics. I wanted to show you a few examples of areas with either diversified or concentrated economies. And here you can see the price evolution for houses for the past 13 years. If you bought in Rockhampton 10 years ago, pretty likely that you lost money. In Mackay, you made money, but actually lower than inflation. So effectively, you lost money. Bundaberg, you made some money. North Brisbane, your property increased by 65% in terms of price growth. This is to say that I've taken these few examples here because what we see in the data is that areas where the economy is too concentrated, let's say mining or agriculture or healthcare, tend to underperform in the long term areas with diversified economies. And the rationale is a bit like straightforward, is that when your economy is concentrated, if something goes wrong to this industry, let's say commodity prices go down, then number of jobs go down in the area because companies have to rationalize costs. Vacancy rate goes up and prices fall, right? So that's why having a diversified economy reduces your risk quite significantly. It reduces your risk. And of course, if you buy in an area where you're lucky enough to have, let's say, mining prices go up, then maybe you will be lucky throughout your investment and prices will go up higher than average. But basically, you are purchasing risk, right? And when you invest in property, you want to maximize return and minimize risk. So again, buying in areas, especially regionals, where the economy is concentrated is a risk. And overall, on average, it underperforms. That's just an absolute fact that we see in the data. All right, guys, we are out of time. Thank you so much for joining us to this webinar. Also, if you have feedback on like what topics would interest you for the next time, or like ideas on how we can improve our webinars, like please reach out to us. Thank you so much for your time. Thanks. See you soon.